Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, June the 17th. The year's 2022. Let's talk trading. Weekly wrap-up time. These videos are for educational purposes only. Your results may differ from mine. So let's take a quick look at the weekly chart. And so far, all but two gaps have filled. Notice the pound dollar is 136 pips below the weekly open, 233 below the weekly high, and 241 pips off the weekly low. So when you look at these two numbers, we're pretty much at the middle of the weekly range right here. Notice that we broke out from 5 months ago to put in a new low for the year. Yesterday, we broke out of the upper range of the opening range for the week. That's Monday's high. And then we came right back down through it. Notice we fell out of that upper wick zone. And we're almost back to the Thursday open. For the year, we're 1,352 pips below the yearly open and 240 off of that yearly low that was put in 3 days ago. We had an inside bar 2 days ago. Yesterday we broke out to the upside, and today we're breaking back into that inside bar range. Notice we really don't have much inside bar action on the daily today. On the weekly and monthly, we have a handful. Range, more pairs over 100 than under. The beast clocking in at 324 pips. What a day on the pound yen. Notice the dollar yen's over 135 again. I might get an opportunity to short off of a high there. As most of you who've been watching know, that for the past couple of years I've been trading the pound dollar along with Wall Mall. But recently when I saw the yen peaking, I couldn't help myself. I had to start taking some yen trades. It's just like, it's like apples. They're just there to go pick. And the buy zone, the long traders probably got burned or scratched their trades, but the short traders were rewarded. And notice the weekly open, I think I mentioned that either this week or last week, one of those horizontal line trades, if you just sit and wait and watch, price is going to have to move away from that open. It just does. And you can see here we failed to close above the weekly open. We closed above it once, then a failure, another failure. So that third time was a charm. If you would have shorted at 23.10, you'd be up a few pips right now, over 100. Looks like I need to update this chart to show just how far it is away. But you can see here on the dashboard, close open 172 pips. And that's in 1, 2, 3, almost 4 hours. So it's not that difficult. As I mentioned yesterday, you make trading hard. Why do we make trading hard for ourselves? When something as simple as this appears, you almost get this opportunity at least once a week, maybe twice a week, depending on how many times price crosses the weekly open. But I mean, some of these things are obvious. You see, there's one failure, 2 failures, 3 failures. And so once again, that third time still would have been worth about 50 pips. Then it came back again, 1 failure, or it closed above it once, then 1, 2, 3. I mean, you could say hairy hindsight, but I talk about these horizontal line trades every day. Rats, green rats, are preparing the feast. You can see it looks like they probably had an opportunity to get some feasting here, and then the red rats price touched the edge of the upper or the red rat zone right there, and then fell down once again. Pivot traders, Bambino Flex indicator indicated a long, but it did not pay out at the pivot. Bias is long. First time worked, second time a little bit, but then the third time it died. Pivot took out the daily pivot. That was a trade that I think I saw that one coming. Also here we took out a missed pivot from 1, 2, 3, 4 days ago. So we've taken out all of the missed pivots in May and June. I don't think we've had... Yeah, we've taken out all those missed pivots. Upper wick zone I mentioned earlier. You can see here price didn't even close in it, just fell. Touched the lower wick zone last hour and it bounced. Oh, this is where it gets interesting. For the ranges here for the week, 474 pips this week at the 91 percentile out of the last 12 weeks. High minus previous high, we didn't break it, but low minus previous low, we broke it by 367 pips. So once again, simple horizontal line trades off of the previous week's high and low, simple breakouts, nothing fancy, just hang on for the ride. High minus close for the rats, 229 for the red rats, and 247 for the green, 248 for the green rats. Once again, playing those rat zones on the week can be advantage. On the buy zone traders, high minus open, 96 pip potential, and open minus low was 377. So once again, those simple trades can pay off. Now, I think one part of the problem is that traders sometimes combine things. They want to do too much. When any one of these methods that I'd say, if you just did that method and that method alone, you could prove to be profitable. But some traders fail to have patience. They fail to wait. Now, that's okay. So, for example, Walmart and I, we're really scalpers. We don't, we're looking to be in and out in a couple of minutes, just taking a few pips here and there. But sometimes, like with those yen trades, when I see those opportunities, I put the trade on and I will wait. Hold on just a second. Need to pause. Okay, back to you. So we've gone over those ranges. Just looking at today's, the Walmart trade along with the sweet spots. And once again, looking at these ranges, this was like almost a can't miss. Right here, you long at 90, you'd be up 14, 15 pips at the moment. And these ranges this is like the old days. I mean, for the last 10 hours, we don't have an hourly range under 20. Once again, simple horizontal line trades. I know it sounds like I'm beating a dead horse here, but I really can't stress it enough. I mean, this last hour shortened the 2220. I mean, you hit the double O, so there's 20 pips. Hit the 80. There's another 20 pips. It's just basically trading the method as is just put your trade on, put your stop loss in place, and see what happens. It's not that difficult. The lower high, trade just triggered two M5 candles ago. Long at 21.83, call it 84, would be paying off to the tune of about 28 pips right now. Simple horizontal line trades. Now in this case, this is a price action. We're making lower highs. We pick the lowest high out of the string, and then when price breaks above it, you take the trade. Now in this case right here, price hit it and reversed, and depending on where you put your stop loss, you either stopped out, but then you could have made it back and then some on the next trade. Okay, let's look at the range by month. June 683, second highest this year, only coming in behind April, but we've extended May. And we can switch over. We can show the year-to-date accumulated. As you can see, we've extended the yearly range by a couple hundred pips. About 221, doing the math in my head there. So that's pretty significant. And we can take a quick look at the showing the close minus the open. You can see here we've only had one positive month so far this year. And let's see, close minus the year-to-date open. Right at the moment, 1,316 pips. As you can see here, that number seems to be increasing. With the exception of May, it went back up a bit. And if we look at it from a percentage basis, you can see we're down 9.75%. So if if you're trading for the long term, if you were short, that's not a bad return. 9.75% for the year. And that's just taking the trade right at that yearly open. And hanging in there. Something to check though is with these new interest rates, and I'm going to have to check to see what the swap rates are. It's something that you should be concerned with if you are a longer term trader. And just looking at some of the information from, I believe that's the trade reminder. Yeah. Monthly, lower high, lower low. We're below the monthly pivot, below the monthly midpoint. Sellers in control. Previous range exceeded by 171 pips. We're inside the lower wick zone on the monthly. I guess I should probably switch over to monthly when I talk about those. And then if we look at the weekly, we've exceeded the range. The average trading range is greater than 1.5. 109 pips below the open. We're below the previous week's lower wick zone there. Below the midpoint, the pivot. lower high, lower low, indicating a price action downtrend. And then looking at the